Today, more anti-spruiking in the ACT. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, Cookie Boy's been at it again, and he's chucked me over another example set of property price falls, this time in the ACT. Now, we last looked at this about a month ago, but the rate of decline has definitely increased, as you'll see. And this is another example, I think, of where prices are definitely on their way down. And more people are going to be disappointed. If they choose to sell, they will have to meet the market. So let's take a look at the most recent examples. And as always, I should highlight the fact that these are not scientifically selected. They're just ones that are currently on the property portals. But it does give us quite a strong view of what's going on, particularly when I bring my model to bear so that we can compare some of the mortgage stress and other data as well. So we're going to start in postcode 2603, Griffith. And this property was listed 58 days ago. It's a house, 4 bedrooms, 2 bathrooms, 2 cars. And on the 10th of September, it was $2.195 million. On the 14th of October, it's now on $2 million plus. And if we look at the details for this postcode, you can see that there are around 4,300 households in the postcode, 29% own outright, 36% are borrowing, 34% are renting. 16% of mortgage holders are in mortgage stress, but 46% of renters are in rental stress. Overall financial stress is on the low side. Nevertheless, the scenarios would suggest that over the next 3 years, the best case, that assumes that rates don't go much higher and inflation gets under control, is a fall of about 2% over the next 3 years. The base case is a fall of 25%. That is based on the assumption that interest rates go higher and we have recessions in other countries, not in Australia. And the worst case is a fall of 45%. That would be what would happen if Australia also fell into recession. Looking at the property mix, 46% are houses, 42% are units, and 11% are other types of property, including over commercial premises and shops. People ratio is 2.04. Now on census night, 11.9% of properties were vacant. That's 557 properties, which is actually quite high. Gross investment yield is around 5.6%. The net investment yield is about 2.4%. And according to the ATO, the average taxable income is about $152,000. The average household census income is $155,000. So those are quite high numbers. The disposable monthly income translates to about $9,300, and the typical mortgage holder is paying around 32% of their disposable monthly income on the mortgage, around $3,000. Typical rent at 25.8% of disposable income is about $2,397 a month. Now we're going to go to 2607. At Pierce, this house, listed 65 days ago on the 11th of August, has 3 bedrooms, 2 bathrooms and 2 cars. And on the 3rd of September, it was on at $1.09 million. Now, on the 11th of October, it's on at $1 million plus. And if we look at the postcode, about 5,900 households there, 36% own outright, 38% are borrowing, 25% are renting. Mortgage stress is quite low at 17%, but rental stress at 75% is quite high. The scenario suggests a fall of about 5% over the next 3 years. Best case scenario, base case down 29, worst case down 48. And I would say one of the reasons why these falls are more significant is we expect the public's expenditure to be under severe pressure over the next 2 or 3 years because of both structural issues and because the recession, whether it's overseas or here locally, will have an impact. The houses make up 70% of properties in this postcode at 70%, some units 8.7%, and some other types of property too. The people ratio is 2.34%. On census night, 6.5% or 329 properties were vacant. Gross investment yield is about 4.5%, net investment yield about 1.1%. Here, the average taxable income according to the ATO, is just over $100,000 per annum, whereas the average household census income is $125,000 per annum. The monthly disposable income is around $7,438, and the typical mortgage holder is paying about 38.4% of their disposable monthly income, or $2,860 a month, whereas the typical renter is paying about 29.5% of their disposable income, which is $2,193. Here's another one in the same postcode, Farrier this time, listed 72 days ago on the 4th of August. It's a house on 881 squares with 3 bedrooms, 1 bathroom, 2 cars. And on the 4th of August, it was on at $1.075 million to $1.175 million. On the 21st of September, it's now on at $997,000 plus. And one more in the same postcode at Torrens. This is a house on 661 squares, 3 bedrooms, 1 bathroom, 1 car. And it was passed in at auction 150 days ago, having been listed 171 days ago. And 143 days ago, it was on $950,000, then reduced to $930,000, then $920,000, then $900,000, and now, 10 days ago, on the 5th of October, it was on at $890,000. Now we'll go to postcode 2611, and this was listed 144 days ago on the 24th of May. It's a house on 420 squares, 4 bedrooms, 2 bathrooms, 2 cars. 17th of August, it was $1.4 million, but on the 22nd of September, it's down to $1.2 million. And if we look at this particular postcode, 14,000 households here, with 24% owning outright, 52% are borrowing, and 22% are renting. Mortgage stress is at 46% of borrowing households, which is more than 3,400. The rental stress is also very high at 68,000, and overall financial stress is getting quite high. From a scenario perspective, we think the best case scenario over the next 3 years is a cumulative 7% fall. The base case is a fall of 30%, the worst case a fall of 50%. 69% of properties here are houses, just over 9,300, 13% are units, and 17% are other types of property. The people ratio is 2.44, and 5.5% of properties were vacant on census night, or 783. Gross investment yield is 4.4%, net investment yield 1%. Average taxable income $94,700 according to the ATO, whereas the census reports household average income at $129,000 per annum. The monthly disposable income is about $7,412 a month, and the typical mortgage repayment is $2,600, or 35.1% of monthly disposable income. Typical rent at $2,243 a month is about 30.3% of disposable income. Here's another one in the same postcode. This was listed 30 days ago on the 15th of September. It's a house, 759 squares, 3 bedrooms, 2 bathrooms, 1 car. On the 15th of September, it was offers over $899,000. On the 16th of September, reduced to offers over $849,000. Another one in the same postcode. At Fisher this time, a house, 780 squares, 3 bedrooms, 2 bathrooms, 2 cars, listed 30 days ago on the 15th of September. On the 18th of September, it was on at $1.075 million. On the 6th of October, offers over $990,000. Another one at Weston, listed 93 days ago on the 14th of July, a house on 870 squares with 5 bedrooms, 3 bathrooms, 3 cars. On the 31st of July, on at $1.2 million. On the 28th of September, it was reduced to $1.095 million. And one more. This was listed 43 days ago on the 2nd of September. It's a house, 629 squares, 3 bedrooms, 2 bathrooms, 2 cars. On the 3rd of October, $1.05 million. On the 5th of October, reduced to offers over $950,000. Another one too in the same area, listed 72 days ago on the 4th of August. It's a house, 672 squares, 3 bedrooms, 1 bathroom, 3 cars. Gross rental yield 4%, which is quite close to our calculation. And the 2nd of September, it was on at $900,000, but on the 27th of September, it was reduced to $860,000 plus. Now we'll go to postcode 2617, listed 163 days ago on the 5th of May, a house on 253 squares, 4 bedrooms, 2 bathrooms, 2 cars. On the 12th of August, it was on at $995,000, but on the 11th of October, reduced to $895,000 plus. So a quick look at the postcode here. 15,300 households in the postcode, 23% are owning outright, 35% are borrowing, 41% are renting. 22% are in mortgage stress of those borrowing, 62% of renters are in rental stress, and overall financial stress is quite high. Best case scenario is a fall of 5% over the next 3 years. The base case a fall of 28%, the worst case a fall of 47%. 49% of properties are houses, just over 7,130. 28% are units, just over 4,000. 21% are other types of property, including over commercial premises and shops. People ratio is 2.25%, and 6.8% or 1,054 properties were vacant on census night last year. Gross investment yield 4.5%, net investment yield 1%. Average taxable income from the ATO is $82,000 per annum. The household reported $113,000 per annum per household. Disposable monthly income is about $7,100, and typically a mortgage payer is paying $2,340 a month, which is about 32.9% of disposable income, whereas a typical renter is paying about 30.8% or $2,193. Now we'll go to 2902. This was a property listed 86 days ago on 21st of July, a house, 4 bedrooms, 2 bathrooms, 2 cars, with a gross rental yield of 4.59%. On the 9th of September, $850,000. On the 24th of September, offers over $790,000. And if we look at 2902, 6,200 households there, 33% own outright, 45% are borrowing, 21% are renting. A lot of them are in mortgage stress, and a lot of them in rental stress as well. So overall financial stresses are very high. Therefore, the best case scenario is a fall of about 12% over the next 3 years. The base case down 35, the worst case down 55. 84% are houses in the postcode, nearly 5,000. Only a very short number of units, and some other types of property is also in the postcode. Typical people ratio 2.44 and 4.7 or 290 properties were vacant on census night. Typical gross investment yield at 4%, net investment yield at 1%. Average taxable income is about $85,500 according to the ATO. The census per household is $114,000. And looking at the disposable monthly income, it's about $7,260. And the average mortgage repair is making 33% of the disposable income, or $2,400 per month, whereas a typical renter is paying 27.4% of that disposable income at $1,993 a month. Here's another one in the same postcode. This has a gross rental yield of 3.94%, listed 73 days ago on the 3rd of August. It's a house, 4 bedrooms, 2 bathrooms, 1 car. On the 20th of September, it was offers above $980,000, but on the 11th of October, offers above $920,000. Now we'll go to 2904, listed 73 days ago on the 3rd of August, a house on 731 squares, 3 bedrooms, 1 bathroom, 4 cars. On the 2nd of September, $799,000. On the 20th of September, $759,000. I'm looking at this postcode, 5,000 households with 36 owning outright, 48% borrowing, 15% are renting. Mortgage stress is 47.2%. Rental stress is 62%. Typical scenarios, down 5% best case over 3 years, cumulative, down 29% base case or 48% worst case. 92% of the properties in this postcode are houses, more than 4,300. And the people ratio is 2.57%. Vacancy at 4%, 200 is quite low on census night. And the gross investment yield at 4.2% compared with 0.7% net investment yield. Average typical income from the ATO is $90,000 per annum. Average household census income is $134,000 per annum. Disposable monthly income typically around $8,179, with 31.8% or $2,600 going on the average mortgage and 28.1% or $2,300 going on the average rent. Now we'll go to 2905, and this was listed 72 days ago. It's a house, 781 squares, 3 bedrooms, 2 bathrooms, 2 cars. On the 5th of August, $870,000 plus. On the 21st of September, $799,000 plus. Looking at 2905, 10,900 households there, with 25% owning outright, 53% borrowing, 20% renting. 27% of mortgage holders are in mortgage stress, but 81% of renters are in rental stress. And the average scenario is a best case of 6% fall over the next 3 years, 30% base case, 49% the worst case. 85% of properties here are houses, 8,800, very small number of units, and some other types of property there too. Typical people ratio 2.57, and 4% vacancies at 431 on census night. Typical gross investment yield 4.5%, net investment yield 1.2%. And looking at the average taxable income, it's about $81,000 according to the ATO, or $120,000 per household according to the census data. And looking at the disposable monthly income, typically it's around $6,971 a month, with 34.4% going on the mortgage at $2,400 and 30.7% or $2,142 going on the average rent. Now we're going to 2914. This was listed 52 days ago on the 24th of August. Gross rental yield 2.51%. It's a house, 4 bedrooms, 3 bathrooms, 2 cars on 636 squares. On the 12th of September, it was $1.7 million. Now, on the 28th of September, $1.599 million. Looking at 2914, 11,500 households, just 7.5% own outright, 59.9% are borrowing, that's more than 6,800 households, and 32% are renting. Mortgage stress is pretty high at 64.5%, that's more than 4,400 households. Rental stress is also high, and overall financial stress is extremely high at 74%. So scenario-wise, a fall of 12% over the next 3 years is quite feasible in my best case scenario. The base case is down 36% over 3 years. The worst case is a fall of more than 50%, perhaps 56%. 71.5% are houses, more than 7,700. 10.3% are units, and 18.2% are other types of property. People ratios 2.99 and 3.3, or 326 properties were vacant on census night. The typical gross investment yield is 4.4%, compared with a net investment yield of 1.3%. And the average taxable income from the ATO is $87,000, or, according to the census, $147,000 per household per annum. Disposable monthly income typically is around $8,520 a month, with 30.5% going on the mortgage at $2,600, or 28.1% at $2,392 a month going on the average rent. Another one in the same postcode, listed 207 days ago on the 22nd of March. Gross rental yield 5.33%. It's a house, 4 bedrooms, 2 bathrooms, 1 car. On the 22nd of March, it was on at $820,000. On the 10th of October, on at $753,000 plus. Another one in the same postcode, listed 45 days ago on the 31st of August. It's a house on 240 squares, 3 bedrooms, 2 bathrooms, 2 cars. On the 17th of September, it was $800,000. On the 29th of September, $520,000 plus. And that brings us to the end of our quick tour of falling prices in and around the ACT. And once again, you see the same trends. A considerable number of price cuts as people are trying to shift property. And vendors, of course, not necessarily willing to still come into the market even at lower prices. I'd also highlight that a number of the properties that we looked at are well below the average investment return that we're seeing in those postcodes, which would suggest to me that typically they're not let out at what they should be let out to maximise their returns, which may be a good thing, may be a bad thing. I suppose it depends on whether you are a current tenant or whether you're a current investor. And I would say that the ACT story to me is quite clearly one where property investors are now getting skittish, and we are seeing more properties that are let actually coming on the market because property investors now realize that the capital growth is over and the cash flows are negative, which means that there isn't much point in holding investment property. Now, as always, we should make a caveat, of course, this is just based on the information on the portals. We don't know details of individual properties, but the trends, I think, are pretty clear. Now, if there are other postcodes you'd like us to look at, do leave comments below and we'll try to get to them. And shout out to Cookie Boy once again for doing all the hard work and pulling all the information out. He's already chucking me more information, particularly looking at Tasmania. So I think probably the next Antispruiking will be a further visit down there, where again, property prices are falling. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.